Good afternoon, everyone. Thank you very much for joining me. This is the non-farm payroll live trade with myself, Russell Shaw. I'm the Senior Market Specialist at FXCM. Please take note of my email address, rshaw@fxcm.com. Today is Friday, I've got 5th of February, sorry. It's the 5th of March, I beg your pardon, 2021. Here's the correct date, 5th of March, 2021. And the time is 1:20 GMT, just after. Here's our risk investment warning. I'll keep this on screen for a few moments, and then I'll bring up the commentaries disclaimer. We've got the non-farm payroll coming out in about 8 minutes. We'll see if we can trade that. This is a live trade on a live account. Okay, so I want to stress that we're not doing a live trade on a demo account. Okay, this is a live trade on a live account. So if there's losses, there's going to be real losses. So my personal account, if there's gains, there'll be some gains on the account. I'm just going to bring up our market commentaries disclaimer as well. I'll keep this on screen for a few moments. Oops, and here is our references: FXCM Market Scope 2.0, TradingView.com, and ForexFactory.com. And with regards to trading, I'm going to keep the US dollar on TradingView. The reason I'm going to use the US dollar on TradingView, this is the FXCM instrument, is because as an employee of FXCM, I actually can't, on my live account, because this is a FXCM construct, I don't actually have access to it, but it's a tremendous instrument to keep an eye on. So I'm going to have this up. Forex Factory is over here, and we can see the non-farm payroll here. We're looking at about 197,000, okay, which is up from the previous months of 49,000. Unemployment rate 6.3%. Okay, for me, I don't think the unemployment rate is particularly important right now, I want to just clarify exactly what I mean as not important. Of course, we want to see the unemployment rate moving down. Of course we do. Of course, we want to see the non-farm employment have good numbers. However, we're still in the midst of a shock. We are recovering economically, right? But the idea is there's probably a tremendous amount of people in the workforce which have just left. Okay, they're not counted as, they're not part of the participation rate. So the 6.3%. The 6.3%, perhaps not totally reflective. So the discouraged workers perhaps not fully reflected in there. But the average hourly earnings, I think this is going to be a very good metric to keep an eye on. And the reason why I think that's a good metric to keep an eye on, if you've been looking at the markets of late, you know that yields have really been skyrocketing. Now, if yields are skyrocketing, the market is anticipating inflation. If the market's anticipating inflation, well, we want to see it reflected in the average hourly earnings. Now, a surprise on this number, I think, could be potentially the determinant of the way the market reacts in terms of its volatility. So we'll keep an eye on that. Now, just before we actually get into the trade, I want to just tell you how we're going to be trading it. We're not putting on a trade. We're not putting on a position before the announcement. Okay, that's not what we're doing. Hey, Andrew, good afternoon. Ray N, lovely to have you on the webinar. So the idea is we're not putting on a trade before the announcement. We're going to put a trade on after the announcement. But the way we're going to try and do it is as follows. So as soon as the announcement comes up, there should be some sort of impulse. So we'll see some sort of big move after that. What tends to happen after the big move is there is some sort of retracement, some sort of correction. That's where we're going to be hunting. And then we're going to try and take up the next impulse move in the direction of the first impulse. Likewise, if the impulse moves down, okay, then we're going to be looking for a correction to the upside. And that's when we start looking for an entry position, then we might go short over here. We're going to be looking at Euro US dollar just because it has the biggest liquidity. And we want to just set some goals. Okay, we just want to set some goals. So I've been thinking about what our goals would be. So firstly, I'm not going to put a profit as our first goal. I was thinking, what should be our first goal? And I'm going to put our first goal as risk control. Okay, so that's our first. In other words, what is risk control? I'm only looking to lose, if I lose, max 20 pips. Okay. Now that would be the first objective. If we get that, I'd say this was fine, because it's then a lesson in risk management. Remember, this is more an educational webinar than anything. It's certainly not a recommendation to buy or sell euro, because the loss may be incurred, right? The second part of the second objective is that stop loss management. I'm just going to put SL because I'm cognizant of the times. Stop loss management. So if we take a loss, okay, if we take a loss, but we can take it less than 20 pips. Sorry, I want the comma. If we can take it less than 20 pips, in other words, we've managed to successfully trail the stock up, that would be a successful trade. And thirdly would be a 20 pip profit. So we go for a 1-for-1 here. Okay, so that's basically the objectives. If there's any questions just before the trade, we've got just less than 2 minutes now. Go ahead and type those in. We've got 1 minute and 25 seconds before it comes out. Anything, you can go ahead and type those, type in your questions. Just in terms of the way I trade, sometimes I go silent. You haven't lost me. I'm just trying to figure out what's going on, because this is real money at risk, right? So just bear that in mind. That this is our screen. Okay, this is a real trade that I took profit off this morning. Okay, so I did short euro US dollar. If you follow our webinars, you'll know that is the case. And we've got a 1 hour, 5 minutes, and then we will be following it on the 1 minute. Okay, so we've got less than a minute now. Less than a minute to go. All right, let's see. Let's see what happens here. 30 seconds, guys. 30 seconds. What time frame will you trade? So I'm looking at the hourly, the 5 minute, and then we're going to do the management on the 1 minute there. Video. Pelija, I beg your pardon. So, all right, let's just take a look. 10 seconds, 10 seconds. Oh, whoa. Gee, did you guys see that? Wow. Whoa. Okay, euro getting hammered here. US dollar is climbing. So I reckon that the inflation numbers probably are pretty good. Okay. Let's take a look. Yeah, wow. All right, let's see if we can get these numbers out, right? Wow. All right, so plus 379,000 versus 198,000. So a massive improvement over the previous month. Let's get the Forex Factory to start giving us some information here. Gee, did you guys see how quickly the market moved there? All right, so so this is the interesting thing. The number of employment, that's the big difference here. Unemployment rate slightly better. The inflation numbers no good at 0.2%. It's no real inflation there, given that the yields have been running exceptionally high. Nevertheless, let's go back to our, all right, so we're getting a big impulse move to the downside. Now, remember what we're trying to do here, right? What we're trying to do here is trying to catch the correction. Okay, so let's take a look here. I don't think I've seen the market move that quickly ever. All right, it was. So we're trying to get in over here if we can. Okay, trying to get in there. We won't get in at the very bottom, but we'll get pretty close. So if we can get an entry somewhere over here, that would be ideal. All right, let's go down. Let's take a look what's happening here. So there's no position put on just yet. Okay, no position just put back. All right. Let's now just start tracking the market. You can see I've added, one of the things that I've done, because we trade these every month, one of the things that I've done is I have added a stochastic. The more I've traded, the more respect I've got for the stochastic. I think that it's a phenomenal indicator. So we'll see if we can get in on a pullback, and then if we can get to the lower quintile there, you know, we're getting a good momentum move. But to get in on the pullback here is looking like it's going to be tough. The market is absolutely hammering euro at the moment, okay, which is by and large the current trend anyway, isn't it? After the market was disappointed by Fed Chair Powell's comments yesterday that the Fed is not looking to check yields just yet. It needs the Fed want to see sort of a broader increase in yields before they act, and that really benefited the US dollar. All right, let's just see. We're getting a bit of let's see if we get a bit of a pullback here. Robin says hammering the GBP as well. Yeah, we can take a look at the GBP. We'll be very quick here because I want to come back to the euro, see if we can get it. Let's just take a look. Yeah, so you can see GBP getting hammered there. But I think Robin, that's pretty much the theme that we've been talking about this week. All right, let's just see if we can get in here. Still no opportunity just yet. I want to bring in my arrow. Just bring this up further. Where is my arrow gone? Okay, there's my line. Sorry, I'm on the wrong thing here. Arrow. Okay. All right, here we're getting some sort of pullback. Okay, so now we're looking for our reference candle reversal. I'll explain that in a moment. I'm trying to keep an eye here. So, all right, so reference candle reversal, something like this. Something like this. Okay, that's what we're looking for. So we're looking for a candle with the highest high. So that's this candle here. And then we're looking for so it's a 3-candle pattern, and then we want to see a close to the right of it, which is lower than the reference candle, the reference candle's lows. So we're getting a pullback here. So let's just see if we can get an opportunity to get in here. Okay, here's the reference candle. Trying to get price to close below this reference candle's low. Okay, not yet. Okay, market's not giving us the opportunity to get in just yet, so we're just going to carry on keeping an eye on this. Still, yeah, I'm just trying to keep an eye on the. All right, just trying to keep an eye on the signal here. Here's still the reference candle. This is lower than this. All right, getting pretty close. Pretty close. Okay, now we just needed to close below. Okay, I think we may. I think we've got the signal. All right. Gee, I'm just looking at the controls are very clunky. There is a lot of there's a lot of lag at the moment. Okay, and that's just because I think there is so much, such a big. I think there's such a big sort of a wide spread. All right, let's just put in our limits here. All right, so you can see the stop loss has just been put in 20 above. And here's our limit. So I can feel the spread so wide here. Let's just keep an eye on this. Yeah, so excuse me, I'm going to just go and mute. I can feel a cough coming. So Kenneth just writes, this is the 4th big fall since 5 o'clock yesterday. It seems to have been some sort of expectation. Could be. We just need some sort of cooperation here. Okay, we just need some sort of cooperation here. Gee, we're just not getting the bears coming in here. So we've got a higher trough. This is a higher trough followed by a higher peak. It's not what I want to see. I want to start seeing the lower peaks and the lower troughs. Okay, let's just keep an eye on this. All right. I'm hoping that this is another reference candle. No, this becomes another potential reference candle. All right, we're getting pretty close to the stop here. What are we going here? 9 points. Okay, 9 pips. $28 million trades in that 1 minute on FXCM. Wow, that's incredible. Thanks for that, Andy. All right, so we've got a potential reference candle here. Hopefully it stems the tide of this big kicker. Still waiting for another reference candle reversal here. $229. All right, let's see. So we've got 1, 2, 3, 4, 5, 6, 7 candles. So 7 minutes, 8 minutes of higher highs. All right. Sure, my heart fell into my stomach there. Let's see, we're very close here of getting stopped. Okay. This swing over here has been a very strong swing. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes of very strong bullish bullish action. Yeah. No worries, Robert. If you want to, if you want the recording, go ahead and send me the email. I'll send you the recording. We are in. We pipped away from the stop loss, but we just see. So this could be a complex reference candle. Let's just see. It's complex as in it's got a very long range, and we've got 1, 2 candles within it. And let's just extend this over. Robert, if you don't mind, I'm going to just give you my email address. If you can just send your email through to me, it'd be much appreciated. It's easier for me to do it that way. I'm just sending it through to you. All right, let me know if you've got that. All right, so we've got a very resilient price here. Okay, let's put this in here. So now this is dangerous. We've got a potential another higher trough coming in. All right, and this could potentially take us out. Let's just see. See, this is very dangerous for our position. This could take us out. We've got a higher low to the left, higher low to the right. Okay, let's just keep an eye on this. All right, it's looking a bit better. Just needed to close below this line here. All right, so I'm going to take this arrow out for the time being. We don't need that. Doing that. Okay. Still, yeah. Okay, just we're 8 pips down. I'm using a standard stochastic. This is a slow stochastic, 15.55 there, Ian. 15.55. Does that answer the question there? Okay, it's just move this out of the way. There. Okay, another potential higher trough coming in here, so we just got to be on guard there. Okay. Just pop it there. So what I'm looking for now, I'm looking to see if we get a higher trough versus if we get a lower peak here. If we can get a lower peak here and it starts moving down, we can start trading the stock down, but not before yet. So we just need an opportunity to start taking some risk out of this trade. All right, let's see if we get that opportunity. So it's 25 minutes after the announcement. So after a big volatile move down, so a big volatility injection down, big volatility injection up. Okay, you just slow down slightly. Okay, so this is again quite troubling in that we've got this potential higher trough here. Okay, so we're looking to see if the lower peak comes in. Okay, so we've got another potential reference candle here. Let's just wait for it to close up, see if it's still red when it closes up. Okay, there we go. Now let's keep this up. Daddy Raj, let's put in your timing indicator, yeah? It could help. All right, so a potential lower peak coming in here. We've got 13 seconds left here. Let's just keep an eye on that. GS is a real grind. As soon as the position was put on, I was on the wrong side almost immediately, so it's been quite a stressful trade. All right, let's just put this over here. This we can take out for now. Okay, so we can't drop the risk yet because we don't have price taking out this trough here. Okay, so we need price to take out this trough here, which is going to in effect validate this area here. We can start dropping the stop loss towards this area. We just need price to cooperate and just dip below this horizontal, and then we can start looking to take the risk out of the trade, which has been quite a stressful trade. It's been quite a stressful trade over here. Kind of felt my pulse quicken considerably. Let's just keep an eye on this. Robert says he got a little from the S&P on a quick sell. S&P also recovering, Kenneth. All right, let's just keep an eye on this. The market still hasn't given us what we need. What's encouraging, I mean, is that the stochastic is making its way down to the lower quintile, but I'd be a lot more comfortable if we were away from the stop loss. So just a little bit more from this, just a little bit more. Just wanted to really show that it's under this. Okay. Just want a little bit more before I start dropping the stop loss. Okay, so something interesting has happened here. We'll just have to see how this concludes. But peak, trough, lower peak, lower trough. Okay, peak, trough, lower peak, lower trough. Now I want to see if this starts some sort of movement in our direction. Let's just keep looking here for a few moments. Okay, again, not too thrilled about this. Okay, getting a trough here. Okay, so this is a very dangerous move. This swinging towards us. Here's the higher trough there. We get, so you look at the high trough, the reference candle. Okay, let's just keep an eye on that. We are so close here. We're a pip away from being stopped. Oh, there we go. All right. Well, that's the end of it. We've kept the risk management pretty tight there. Okay, and we were just on the wrong side of the trade from the get-go. Unfortunate, but that's just the way it tends to happen. So the trade unfortunately didn't go away. This non-farm payroll. Just wanted to get a general feel. How did you guys find that? Did you guys find that useful? Just go ahead and give me some feedback. Very nice, Clovis. Very nice. Made 15 on the first. Very good. Just give me an idea. Did you guys you guys okay with that? All right, excellent. Nice, Ray. Ray W made as well. All right. Generally good feedback. Okay, guys. That's excellent. So what we'll do. Nice, Ray. Ian says, would I have normally put the stop above the initial large candle? Generally, Ian, what I would do is I'd go for a 1-for-1 in terms of risk reward, and I would look at a 20 pip up or down regardless. So the idea here is I'm not looking at the support levels per se, rather just to try and trade within a band. And the reason for that is because the idea is the volatility theoretically should swing between some sort of band. So that's the idea. But you're quite right. We could have perhaps looked to put the stop loss above a resistance level. So that would be something that I think certainly has merit. All right, Robin. Good luck. Yes, Ray W. Just send me an email. Happy to send you the recording. All right. Excellent. All right, guys, let's wrap up here. In the next 23 minutes, 22 minutes, no, 23 minutes, next 23 minutes, we'll do the US Open. If you don't join me for that, have a great weekend and look forward to chatting with you again. Thanks very much, guys. Chat to you guys soon.